Oh, we're already there. So hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this, what do we have, Wednesday, I think. I hope you all had a great week so far. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are linked in the video description down below. And the one thing I truly recommend, if you haven't done so in the past, is check out the Elliott Wave Principle, which you can read online for free when you use the link in the description down below. That's that. With that, we can jump into my portfolio. Nick, let me know in the chat if you're here as well. So yeah, so I know that you're here, or if you're not here. And with that, we are going to look at the portfolio. We have another break even starting to today. I'm just checking the daily notifications. We see Immersion had a huge increase in volume for Barnes & Noble Educational. I keep getting the reminder to adjust my order, but that's my profit target, so I'm not going to adjust it. And that's pretty much everything that's relevant to me. I'm gonna have a sip of coffee. Nick, if you're here, I said, please let me know in the chat. If you're not here, or if you're not here, you don't hear me, but if you're here, but somehow you have issues with the chat, then please let me know on Discord. I'm also gonna check my messages there real quick. Doesn't seem like there is any. Okay, and there, okay, there's also nothing. I'm a bit behind schedule as so often with a lot of things that I plan to do, so I'm not sure how much time we'll have today for the stream, but I'm going to do my best to maybe dive a little bit deeper into a few things. There's also one or two things that I want to check out. Anyway, so for those of you that are here for the first time, our portfolio is relatively unchanged. It's actually really unchanged. I still hold 600 shares of GameStop, against which I sold $30 covered calls that expire in January. Outside of that, we have some positions that went totally wrong, so complete gambles that didn't pay off. In SunPower, went bankrupt. Greenwave, you can see the result. Maybe, so like our average compared to the current rate, maybe in some point that will turn into a profitable investment. It's just not worth closing, in my opinion. Faraday Futures, where we sold covered calls. Our average there is actually quite low, but then they did a reverse split. We only hold 5 shares, blah, blah, blah. So anyway, our positions that we care about are GameStop because it's the biggest exposure, Neo, Immersion, Barnes & Noble Educational, Novavax, and Grab. That's what we care about. We start today with GameStop. So I mentioned it yesterday. It's been a bit of a pain in the ass, the development that we had here. I'm still not 100% sure. I actually, for GameStop, would recommend that. No, I mean, watching yesterday's episode will also not tell you much because this part here is a little bit confusing. I strongly believe that we have not seen the end of the correction. And this here, however, is a 5-wave move. So as, where do you come from? Here, yeah. So here we have 1, 2, 3, 4, and 5. Which means we are right now expecting a correction. The big question is so we expect to correct at least this part here. But the big question, however, is what the heck is the overall pattern? So is this the wave C of a corrective pattern? So would it be, for example, A, B, C, or is maybe point A here and so on? So I still believe that we should expect another move downwards. And I believe my expected target area at the 61.8 retracement will hold up. However, that's my belief that I can currently not confirm with a pattern that I'm happy with because of this mess here, mostly with the earnings candle that went haywire. But we'll have to wait and see. Ideally, in my case, considering my current positions, we would go down from here and then start to go up. And only after January 17th make it above 30. It's obviously also possible that we just go up from here. If we go above 34.80, then I start to miss out on profit because of the premium that I got for the call options. But again, right now, I still believe that we are due another move, another corrective move, before we indeed get our 5th wave that will then keep us above 30. But yeah, time will tell. Now, Yeah, now that we have that, again, since nothing's in the chat, so Nick, if you're here, please let me know in the chat. Just write hi or something so that I know. And yeah, now that we have that covered, let's move on and look at Barnes & Noble Education Inc. Correcting now, so we apparently finished another 1, 2, 3, 4, 5 move and are currently in a corrective pattern. Question is how far. I'm still bullish. The worst case scenario that I can right now see would be that somehow this entire move here is basically 1, 2, 3, 4, 5. There are some things that point towards that, but I'm not fully happy with that. And if that's the case, we would right now be correcting this entire 5-wave move, which means we could go also down to the 1025 mark, for example. I would have to look closer, but if we look closer, we have more of those useless candles in quotes in between that just clutter the picture. So we'll stay on the 12-hour chart and just keep holding. Our average is around 1045. Yeah, we'll just keep holding because I believe there's more upside to come. So that's as simple as it gets. Yeah. So here we had a high of 1439, and that was actually slightly higher at 1441. Theoretically, it is possible. I'm not saying that it's likely, but it is possible that this is a big A, B, and C move. In which case we might actually go down from here. In which case I will see my small position going from a $50 profit to whatever dollar loss. But we see we only have $500 exposure total, so it's not the end of the world if it happens. For now, I believe still that there is more upside. So we are going to stick with that position. But again, just my personal opinion, not financial advice. Don't bet your house because I say I believe so. Moving on, grab not much relevance here on the weekly chart. We apparently are about to get another ABC correction. Before we then hopefully go further up. Unfortunately, here we also have the option that this is A, B, and C, which would mean that from here we go further down. But we only hold a January 26 call. So we have $50 risk. If I'm wrong, then I lose $50 on this trade. So if from here we go down instead of what I believe is more likely 1, 2, and now wave 3. If I'm right, we might go down here a couple of weeks, but should then get a strong upward move. And by the time my option, gets close to expiring, it should actually be worth much more than the $50 that I paid for. Immersion had strong upwards movement. We already had our confirmation in quotes, or likely confirmation that we indeed bottomed out here, where we have an A either from here, most likely from here to be honest. So where we have an A, B, C 3-wave move down here and are now on our next 5 waves upwards. So our exposure there is also not that big. We held an astonishing 50 shares. So again, $500 exposure. Right back. Sorry, back again. Always have to answer the phone, and you never know if it's just some spam advertising call or if it's something actually worth listening to. In this case, it was our business bank, and we'll just have a call then later. Anyway, So where were we? We were looking at our immersion exposure, So circling back to immersion, nothing changes. Cost, we're still waiting. Our exposure there is also not that big, although it's a little bigger with $1,000. We're actually waiting for a break of this high here, so here, or a break of this bottom. I believe we should break the high. I really believe that this is our corrective move finished here, retracing almost perfectly 50%, but we will only know or have additional confirmation once we break that top. So we're waiting here. NEO, surprisingly, we traced a little bit more than I expected here. I still believe that the correction finished here and that our entries overall are good. So I still believe that we will get another 5-wave move up here, at least to 676 or 898. So we're just going to hold on and see how that plays out. Our entry there, I said, is solid. So Novavax, that's the one I got a little bit wrong too early. We entered here with call options that expire, unfortunately, already here. Yeah, I thought this would be the entire correction, A, B, C. However, it turns out that we have a B, C, followed by ending diagonal potentially down here. So this should be now the end of the corrective pattern, and we should now get our fifth wave up. However, it might not happen fast enough to get my options into profit, but we'll keep an eye on it. I think they're still around max loss right now, so around $200. If I can close them for less of a loss, then I will eventually do that. But until that happens, or if it happens, or yeah, maybe it doesn't happen. But yeah, we'll just keep an eye on it. Thankfully, there we also, our exposure is limited to, I think, $250 total. And we also sold covered calls or calls against that at higher strike prices, which means that we at least pocket $25 to reduce the loss of those options a little bit. We can see we have $225 risk. So with that call, we reduce the risk to $200 effectively. Yeah, while still having potential profit if there would be an insane increase, like something like this. Yeah, so yeah, that's that. That's about the existing positions. The most important one is usually going to be GameStop, but again, until we have a few more candles on the chart, I just cannot make sense of the mess here as far as Elliott Wave principle goes. If you have any ideas of what pattern applies here, feel free to share it in the chat. And yeah, I'm going to have another sip of coffee, and then we're going to look a little bit into crypto, and then we're going to look in a few other things as well. Also, guys, don't forget, if you're sitting in front of your computer half the time or so, don't forget to hydrate. So drink something. And yeah, let's take a look at Bitcoin. Bitcoin started another correction here. We're likely, on first glance, I mean, we labeled this here as a flat correction, now believing that we should be in 1, 2, 3, and 3 should be at 120,000. So that's where we have our take profit. But on first glance, we have another 1, 2, 3, 4, 5 in some form here, and are likely now retracing this move. It's possible that the retracement is already finished. It's possible that this is wave A. We're now getting wave B, and then we get wave C, and maybe even retrace down to 100,000. I'm still hyper bullish and expect further upward movement in Bitcoin in general. So we'll just hold our small position that we got down here at around 95,000. Yeah, so not much else to say here. We could try to label it on the hourly chart and so on, but right now I'm happy with the labeling we have. So no need to try to confuse myself by trying to also label the lower time frame. Yeah. XYO, as said, we expect further downward movement. Although, like I mentioned yesterday, it's possible that this is the end of the corrective pattern, but it probably already turned out 2261, and here we have 2271. So right now, that still would be the theoretical end of the corrective wave. But however, I still believe that we have to get another push, and I believe that we will get to see these 50% retracement here. So 0.019 cents dollars. So basically 2 cents per XYO token. And if we hit that level, that would be where I would consider closing out some of our Bitcoin position to actually get in here, because here we would have, while the risk is way higher as a percentage, the reward would also be way higher if we are able to correctly call the end of this wave, assuming we're right with our previous labeling. That's the other if here, yeah. XRP, as I said, should move sideways and down. So far, this could be A, B, and we're still getting a wave C or so. It is possible that it goes higher, but then we would have to reach the 461.8 retracement or extension of wave 1, in my opinion. So I believe it's most likely, considering how far we already went, that we are going to get sideways and downwards movement for a wave 4 before we get our wave 5. I don't hold any, like, I think it's like maybe $30 worth of XRP at the moment. If we were to see the pattern play out like this, we would consider entering, but probably not above the 38.2 retracement. Yeah. Storage, yeah, like here, unless I got it wrong, I mean, visually we have our 1, 2, 3, 4, and 5, and 5 reached the minimum target, although we're looking at a truncated fifth wave. However, even for the assumption that this here is wave A, wave B, wave C, then that would be our minimum target. And on the even better assumption that this here would be wave 1, wave 2, and wave 3, we can see that our target area would be much higher the usual target area being at 16 to 24, almost $25. So we're just gonna hold. I'm gonna keep my sell order at 80 cents because that would be this minimum target. However, if we get this to play out as a nice ABC pattern, we're also gonna have to throw a retracement here so that I spot that better, for which we will have to look at lower time frames then. But if it turns out we actually already hit the 38.2 retracement, so just a second, we're gonna daily chart. Okay, on the daily chart, this would suggest that we are the daily chart would suggest that we here only have wave 1, wave 2, wave 3, maybe wave 4. So, but that wave 4 would already retrace a lot of what we would expect. I don't know what's higher here. 73.3, 73.69, yeah. So we already retraced 61.8% here in that candle, but it's a weird move because it looks more like 1, 2, 3, 4, 5. So we're gonna have to keep an eye on it. Maybe switch from the weekly chart to a 3-day chart or so. So just to have a little bit more focus on the whole thing. Because depending how this plays out, I would move my sell order higher. I would not sell early. I don't hold a fortune in storage or storage. I just earned it by running a node for a year or so. And I just want to make sure that I get the most for those tokens. And therefore, we're going to see if we can, with Elliott Wave Theory, actually determine the best exit point for us. Right now, I said that would, in my opinion, be the 80-cent mark. But outside of that, if this indeed is 1, 2, 3, 4, 5, and we are right now either retracing this, or from the smaller chart, it looks we are only retracing this, then we would actually have way more upside to come. And I would then move my take profit order or my limit order higher. Yeah, the rest we're not really invested in. One thing that, Algo, that's one we're waiting for. Algo is moving nicely, so we actually expect this to turn out as 1, 2, 3, 4, 5, ABC, and go a little lower. So we would actually expect a breakout here. So we are in for, we can see that's end of January, February. So we're in for a sideways movement, in my opinion, sideways and down. If we get a nice pattern here, we would also consider an entry, or actually, I'm gonna have to double check. I think oh no, I don't have that in that account. Yeah, I will have to check that later then in my Ledger wallet. But my exposure to Algorand is also not that big. I know that I'm up a couple 100%, but because, yeah, like I think we're gonna hold on. We should still get wave 4 and then a 5th wave. And if that's the case, I mentioned yesterday, it's also possible that we are only correcting this move right now partially, in which case we would still get another push to the 4618 extension. So that's actually why I keep holding. And if that's the case, then obviously it would be done to sell right now. But eventually we should get a 4th wave. It could be that this is already wave 4, but considering that we don't hit one of our usual levels, it's almost more likely that there is another push yet to come. Right now would be fitting because we basically would have ABC retracing 21.4% roughly, and that would then be potentially the next wave 1, wave 2, wave 3, wave 4, wave 5 that takes us here. We'll have to also keep an eye on that. Now I wanted to check out Nike. Not sure what the ticker is. Oh, NKA. Okay, so there we go. Stocks, and then here our monitoring list. US dollars, Nike. There we go. We'll start with a yearly chart. I mean, they're already older. Takes some time to load, yeah. But yeah, can I just enjoy my coffee in the meantime? Oh, yeah, that's tricky to label. Technically, first assumption would be obviously that this here is wave 1, wave 2. Can even see a 3-wave move, A, B, and C. And then here we start our next, but here it becomes tricky, yeah, because based on that, we would assume much higher movement. But we can already, in quotes, assume that this is basically, we'll ignore that part here. We'll label from here. So we'll go to a 12-month to a monthly chart, which already adds a gazillion candles. And we first actually will ask the auto labeling to see what it says, and we'll label then basically, yeah, so auto labeling would also suggest basically wave 1, wave 2, and then it somehow already assumes that this is 3, 4, 5, and I completely disagree with that assumption, yeah. Simply because of how long this wave took versus that joke of the wave here, retracement levels and so on. So I think auto labeling is wrong here. There you go. It's a little tricky to see 5 waves here on a monthly chart, but that's we can either take this here as a 1, 2. That here, we would have to look closer and try to label it, or that. So okay, if we take this one, we see we would bounce at the 461.8 extension level. If we take that one, it's the 430. And if we take this one, then we bounce, oh yeah, like there are a few things. So we bounce on 161.8 on the spot. We bounce on 461.8 on the spot. That's a tricky one, yeah. It's going to be tricky because if we switch to a weekly chart, it's going to be even harder to make our way back to, I think that's the point. Visually, I would say this here is 1, 2, 3, 4, 5 for wave 1. Wave 2 or wave 2 is a flat correction. So I think visually this is not so easy to label here, yeah. But I would assume that this here is basically 1, 2, 3, 4, and 5. It would need to be a diagonal in that case, yeah. So because this area here goes lower. So if this is our wave 1, then we could add this extension here. Yeah. So let's just see if we can get that confirmed in some ways. Yeah. To see if basically Nike would be a good buy right now, or if we expect further retracements, and at what levels entering might make sense. We retrace 50%. We have a clear ABC move. Like this, so ABC, but I actually didn't want to add the wave. I wanted to add an expansion to see from the expansion levels how nicely it follows the expected pattern. Yeah, we exceed the 100% target, but we're still within the maximum target. So while we retrace a little further than we usually would expect, we turn around at 50% and we're still within the parameters. So that part's good. Now, if we apply Kennedy channeling technique, this would, as a result, mark our base channel, where we take the starting point and point 2 and a parallel through point 1. And if we now zoom out, we basically would wait for a breakout from the channel that literally never happens. I mean, here it happens. Zooming in the wrong way. Yeah, so Kennedy channeling technique, not much of a help here because we literally never get the breakout to the top. And if we would assume this is our wave 1, it becomes even worse because the channel gets steeper. Now, considering the huge price difference, we actually should be right on logarithmic, but maybe we are not. So let's circle back and look in a linear chart. Yeah, it makes it just harder to label. Now, actually, it makes it potentially easier to label. So it might be that here, where's the low? Low 83, 99. So 83 was the low. So I think that's then our wave 1. We'll need a few more levels here, apparently. So 1061.8. Let's move this to the side. Apply, still too short. 1161. Yeah, there we go. Now we're talking. We're also going to use Kennedy channeling technique to try to confirm this, but basically from the looks of it, it looks to be like this. So there we are actually now in quotes talking. Yeah? So if this is our wave 1, now let's jump back on the weekly chart. I have to use the, where is it? There we go. So weekly chart, and what we want to do is actually set that channel right. One second. Come on. So this is our wave 1 here, and our wave 2 is down here. So starting point, wave 1, wave 2, and then like this. And then we have our base channel. Now here we actually get our breakout. We'll have to switch back. A monthly chart might work, yeah. Just make it a little easier. As said, we bounce here. Now, if we are on a monthly chart using Kennedy channeling technique, again, like I'm gonna have to zoom in and work around a few things here. So yeah, need to zoom a little bit to see at least our wave 1 and 2. Yeah. So if that is our starting point, then we would now have point 1. No, wait. Now we have point 1, point 3 with a parallel to point 2. So we actually will need to zoom out. Up. No. God. And for example, have roughly this. So here's roughly our point 2. Oh, wrong button. And we don't have a breakout to the bottom. Yeah. So here we would have roughly this. Here we have a breakout to the bottom, so we'll have to play around a little bit here again. So let's actually, so we had 1100, yeah, so extension. But we don't bounce nicely, so we are going to, did they crash that bad during COVID? So like losing what, 40%, okay. It's theoretically possible that this is our 4th wave. However, considering the view, so how it looks, considering how long wave 1 is, how long wave 2 is, I don't think it's possible. So it's theoretically possible, but I don't consider it fully possible, if that makes sense. Yeah. Now we still need to adjust our wave 2 parallel here. So we want to have it like this. So which means only with the breakout here, we are in quotes in confirmed wave 4 territory, which also means, now come on, which also means it's really not that easy to label on such a long time frame, but which also means that basically we should be retracing around this. Again, I'm gonna zoom in, and then we're gonna try to yeah, it's close enough. So close enough with our parallel here. So now we can move forward, which means we are right now, I said, in our wave 4 territory, which means we could have our so-called deceleration trend line that probably will look like this. And with that, Nike actually is a potentially good entry right now. We are, so while this is not the wave 4 of the bigger pattern, it's likely the wave 4 of this move. And if that's the case, then we are right now into the area of wave 4 of the previous impulse of a lower degree. We hit the 61.8 retracement, so like 10% lower at 70.41, which means there is a very, very decent chance Elliott Wave expansion. If we try to see how percentage-wise how that holds up, we also hit our minimum target for that wave down. So there is a very, very decent chance that this actually is the bottom of the correction, which would mean that we would now get our 5th wave, from, as said, we need 0.2. It's a little bit hard to pick the right moments here, but yeah, like roughly. And our fifth wave targets, as we can see, it would be a minimum target at 180. Now we're looking at a monthly chart here, and we can see that we're looking at a multi-year period and whatnot, yeah. But basically, there is, based on Elliott Wave Theory, with a rough analysis, based on my opinion, not financial advice and so on, a really, really decent chance that this year is the low at 70.41, and that from here we are now about to see the next 5 waves up with a minimum target of 178.19, which obviously could take a couple of years. So we're talking about 150% minimum target, so guesstimated. For, yeah, like for, I don't know, even if it's 10 years, yeah, so we're talking about 15% per year. Obviously, it should play out as then 1, 2, 3. We're gonna look closer just on the recent stuff, but even here, weekly chart, potentially 1, 2, 3, 4, 5, A, B, C, and now we should see the next 1, 2, 3. We don't have any free capital. What's the longest options that are available for? Let's done. Option strat, there we go. Optimize Nike, and we say our minimum target would actually be at an insane 178.19. 178.19, but the options duration, the longest one up biggest would be 27. Yeah, so we don't get there in that time. Yeah. So that's not going to work out. Considering here we're talking from 21, so that's a 3-year period to go down here, and the previous period would be from 2000. So here we're talking about the 20-year period, and wave 1 was a 84 till 96, so a 12-year period. So we would consider like like options actually not a good play here. Shares for the win here long term. If we look closer, even closer, so let's see what happens since we bounced there. I mean, we have relatively clear 1, 2, 3, 4 drawn out and 5. Yeah, A, B, C, which means again this should be the next 1, 2. Yeah, weird corrective pattern. So we might still be in an unfinished correction here, although it looks nicely, relatively nice. So there might be a little bit downside, but I think right now would be a good time to enter. Unfortunately, we don't have any cash available. And let's check option-wise. $70, so 10 shares, $700, 100 shares, $7,000. So the premium is not that great for selling cash secured puts on short notice. If we go to January 17th and say then we get $100 for 17,000 capital commitment, for 7,000 capital commitment. So that's not going to be a play to make, especially since in GameStop we have a clearer picture and higher premiums. So, but we will keep an eye on it, and I will start to dedicate funds to Nike once we have available cash. So either get our shares called away, or so the GameStop shares called away and free up $18,000 in cash, or our calls expire worthless and we just sell new covered calls and get $1,800 to $3,000 in cash. So we definitely are going to jump into Nike. I really think that it is possible that we still have a move down to come a little bit or so, that we retrace further. I mean, technically we could even lose another almost 50% here, but considering that that is likely the wave 4 of the previous degree, because after that we have a nice 1, 2, or 1, 2, 3, 4, 5 move, and here the fifth wave is also even on the monthly chart pronounced 1, 2, 3, 4, and 5. So I believe that, yeah, I said we hit the minimum target. It's the 61.8 retracement level and so on. So there are multiple things that point towards that actually being perfect. If we would have labeled this sooner, we would have recommended, in quotes, or not recommended, I would have said 70.41 would be a good entry point, and we actually would have been right or we would have missed, let's see, 69.50, so plus minus 90 cents, we would have been able to identify this bottom. Even if we then turn out long-term wrong or so, would have already been a 3-month 10% or so profit. That's possible with a trading stop loss. Either way, we will start to get a few shares as we go, as a long-term investment for up to 10 years, based on the assumption that my labeling is correct. Yeah, so yeah, and with that, I actually covered the things I wanted to look at today. There's still a gazillion more things to label. I noted. Let's actually ask the 8 ball. Will Nike go up from here? So will Nike go up from here? No answer. No, it flipped. What did it say? Better not tell you now. Okay, that's not giving me an answer, so let's try again. Will Nike go up from here? Without a doubt. So, I mean, one could argue, but I think better not tell you now is kind of like, well, one might assume it's a negative answer. It's not a negative answer. It's no answer at all. And the second repeat was without a doubt. I'm going to try to, once we move in January, set up a webcam again that we can film from the top so I can actually accurately show you the responses as well, so you don't have to trust my word. But yeah, the 8 ball again actually provides the answer that I'm looking for, so that without a doubt, Nike will go up from here. I should just make my trading decisions based on an 8 ball. Yeah. And so therefore we will eventually jump into it once we have some free capital for doing so. But yeah, we covered what I wanted to cover. As you saw, here was your reminder to like, subscribe, and enable notifications so you don't miss out on future videos. As always, I hope you were able to take something away from today's stream. Hope to see you then in tomorrow's episode, again around 5 minutes before the Nasdaq opens. With that, thanks for stopping by. Have a great rest of the day, and then see you tomorrow. Bye-bye.